So I have sold Dixon just now, just 1 hour ago. Today is 23rd of December as I record this video. This video might get published late on the channel, but that's not the point. The point is I want you to understand my thought process when I'm buying and when I'm selling the stock. Okay, so today is 23rd of December as I record this. The market is live right now. It's been almost 2 hours and I have sold it today maybe 9:30, 9:45. Okay, when the market opened. So let's have a look at this stock. Why did I sell here? Okay, is there something that changed? So what do we do while selling? The same things we do while buying, right? We do comparative analysis, we do technical analysis, fundamental analysis, and we have a look at market situation. So market analysis. So four types of analysis. So let's begin. Let's go to MarketSmith. I will type here Dixon. Lot of things to learn from this video. Yeah, I go down, I click on consolidated. Let's look at comparatives. See, price strength is 90, fantastic. Accumulation distribution rating A, fantastic. Group rank is not great. Okay, so the group rank when we bought the stock was 70. Now it is 74. And if you see, the group rank I think is declining. 6 months ago, so the industry is household appliances and wares. So let's go to household appliances and wares. Yeah, household appliances and wares. Have a look at this. 6 months ago, it was 56, the rank, now it is 74. So 2 points are in our favor, two are not in our favor. Comparatively, stock looks weak. Fundamentally, nothing has changed. I mean, overnight things don't change. So accelerating sales, accelerating EPS growth, sales growth, triple digit growth in EPS, triple digit growth in sales. The annual EPS is also expanding. Okay. For the past 3 years, 32, 42, 62, fantastic. Return on equity is more than 17%. Okay. So fundamentally, it is strong. By the way, check there is a red flag here. This red flag was not there when I bought the stock. What does that mean? Red flag doesn't mean I sell the stock. Red flag means if I have a position in the stock and if there is a red flag on the stock, then I will not be adding more to that position. Okay. That is my stance. That is my rule that I have taken for myself because I don't want to take unnecessary risk. I might hold some of my position in the stock even though there is a red flag, but I will not add to a stock on which there is a red flag. Okay. So comparatively, the stock looks weak. Fundamentally, it is strong. Red flag is one negative sign. Okay. What about technicals? Well, technicals, when we buy, we are looking at the base, but when we are selling, there is no base. So for technicals, you have to go to the chart. So let's go to the chart. Have a look at this. I had marked three blue lines. Blue line is my mental stop loss. Okay. So these two yellow lines, that is my buying range. Okay. The green line is my average execution price. The red line is my hard 8% stop loss, which is 8% below the green line. The first blue line is my mental stop loss. If the stock closes below this price, okay, I will start reducing my position size. That is my decision. The second blue line is here between these two candles. Okay, because there is a rising window here. A rising window becomes support. The third blue line, which is my third mental stop loss, is between these two candles. Okay, because there is a rising window. Now, if you see technically, the stock closed below the rising window. So the stock has broken the rising window. Okay, that blue line represents the rising window. That's a major red flag for me. When the window gets broken, okay, that is not a good sign. Okay, that is one major reason that led me to reject the stock. By the way, the pink line is my average selling price. Okay, here I bought the stock on this day. So there is a 13.01% gain in about maybe two to 3 weeks. But wait, let's go to the market conditions. Now, if you look at market conditions, I click here, I go to the market conditions. See, the market is still in a rally attempt. Now, in a rally attempt, look what it says. A rally attempt fails and the index goes back into a correction if it undercuts the most recent low. So, how do you check that? You go to Nifty. Okay. Have a look at this. This is the most recent low. Okay. On the Nifty, there is a falling window here on 19th of December. On 20th of December, the market tried to close that falling window but failed. Moreover, the market means Nifty. Nifty is the index which we use as a proxy for the Indian market. Moreover, the price has closed below the 50-day. The price has closed below the 150-day. The price has closed below the 200-day, which is a major red flag. Now, the question is, why did I not sell Dixon on this day? Okay, there were other stocks in my portfolio as well, like Keynes, Time Technoplast, Dixon. Why did I not sell on this day itself? Why did I wait? See, this was a Friday, okay? And I decided that let the market close, let the week close. Then, whatever stocks I have in my portfolio, I will do an objective analysis of each stock. Which stock do I want to hold? Which stock do I want to get rid of? I will take this decision, I will do this analysis over the weekend, and then on Monday, I will decide what to do based on the opening price of the stock, opening price of the stock, opening price of the market, things like that. Okay. That is the decision I made. That is why I did not sell on Friday. Otherwise, I could have easily sold on Friday because on Friday itself, the stock closed below the falling window. So, sorry, rising window. The Friday itself, the stock closed the rising window, which was a big red flag. Another reason I did not sell on a Friday is because you see the volume is low, although the stock has started to come down, but it has started to come down on smaller volume, which means what? The institutions are not selling, the retailers are selling. So I was getting mixed signal. What should I do? Should I hold? Should I sell? I was not able to decide. So I decided let the market close. There is no hurry. Let the market close. Let me sit on a weekend, look at all the parameters again, and then take a decision as to what do I want to do with the stock on a Monday. And Monday came and I took a decision to sell the stock. I think in the first 15 minutes itself, I sold the stock. I was outside at 9:15. I came back home, I think between 9:15 and 9:30, and I ended up selling the stock as soon as I came to my desk. I was not checking my mobile phone. Okay. So, what was the reason for selling? First, the market is in a rally attempt. So, if it undercuts the recent low, it will go back into a downtrend. Okay. So, if you look at Nifty, sorry. So, if today the price were to undercut this low, that would be declared as a downtrend by Market Smith. And in a downtrend, as we know, we have to get rid of our positions, raise cash. Almost 50 to 75% of our portfolio should be in cash. Remaining could be exposed to the market. But I don't even want to take that risk because there is a falling window here. And the stage 2 status of the market is gone now because the blue line has moved below the green line. That is another red flag. So, what are the red flags here? Number one, the rising window has been broken. Number two, the market smith itself has put a red flag on Dixon. Number three, the Nifty, the market conditions are weak. The market has closed below all the three moving averages. Number four, the market has lost its stage 2 uptrend status. There is a falling window on the market chart itself. So, looking at all of these factors, I decided that okay, I could sell partially. Okay, I could sell partial and I could ride the rest of my position with the blue line on the stock. So on this day, on today, I could sell partial and ride the rest of the position on with the blue line. As long as the stock remains above the 50-day simple moving average, I could have held on to the stock. I could have taken that decision. Okay. But I decided let's wait because see the stock has probably started to form another base. If the market goes into a downtrend, this stock might fall along with the market and might complete 10 candles in the next base. So I might get another opportunity to get into the stock. So I decided, okay, why should I take risk? I don't know whether the market will successfully go into a confirmed uptrend, or it will or it will undercut the low and go into a confirmed downtrend. So I said, let me get out of the stock, book the gain that I have, and then see how the market reacts over the next 1 or 2 weeks, and then see whether I can get a chance to take another position, a fresh new position in the stock. Now, the question is, can the stock double from here without forming 10 candles? Of course, it can. I mean, the stock could double, triple, go up 4 times from here, but that's not my point. Trading for me is a business. Okay. I want to book my profits. Okay. If before the stock collapses and hits my break even point or maybe my stop loss, how much the stock will go up? I don't know. Nobody knows. Even the managing director of the company does not know how much the stock will go up. So if there is uncertainty about the future, why should I hesitate to sell? Another point is this is a positional trade. So positional trade is something that we are not supposed to sell off as long as the price remains above the 50-day simple moving average. Now I have violated that rule because market conditions are weak. There is a falling window in the on the Nifty chart. There was an attempt to close the falling window on the Nifty's chart, which did not happen. And there is a chance that the Nifty could undercut the low. If in these kind of market conditions, I better to I am prefer to stay on the fence rather than be in the market. Book my gain, sit back, relax, watch how the market reacts in the next 1 or 2 weeks. If the market goes into a confirmed uptrend, I will get setups where I can take fresh position. I could also get a chance to get into this stock again if it creates a proper base with 4 points, 10 candles. But as of now, I don't see any merit in staying with the stock, especially given that that falling window, especially given the fact that the rising window was broken and there is a rising falling window on the Nifty's chart. So these are the reasons I sold the stock. As I mentioned earlier, trade management is something where trading becomes an art. It is very subjective. So that is why I am putting a detailed discussion here as to why I sold the stock. I saw some red flags appearing. Okay. There are some red flags and there are some green flags as well. Okay. For example, the stock is falling, but it is falling on low volume. Okay. That means the stock could bounce back with high volume if the market recovers. Now, if the stock bounces back, I am going to miss that rally, correct? Because I already sold the stock. But am I willing to take that risk? Yes. Okay. I am willing to take that risk that the stock could continue going up. But I am not willing to take the risk that a stock which had already given me like 20% gain in 2 to 3 weeks, I don't want to give up all of that gain. Okay. So I want to sit back, watch the market carefully, and then decide whether I'm going to take a new position in the same stock or there are some other opportunities that develop in the market. Selling at a profit in any stock is never a bad decision. So just to summarize, how do we decide when to sell? I do comparative analysis, I do technical analysis, I do fundamental analysis, and I do market analysis. 4 types of analysis to be done. Then observe the chart. Are there windows appearing on the chart? Rising window, falling window. Are these crucial levels being broken? Okay. Observe the moving averages as well. See, the 8-day exponential moving average has been broken on Friday itself. The 21 days holding, the 50 days holding. So I could have held on to some position in the stock, but I decided, okay, let's get out and see whether let the market conditions improve. And then we can decide what to do next. If the market conditions improve, the stock might give another opportunity to buy. If the market conditions improve and the stock does not give me another opportunity to buy, I might get another opportunity in some other stock to buy. And if the market actually goes into a downtrend, well, I've already sold the stock. Okay. So even in a positional trade, for me, this is still a positional trade. Just because I sold the stock doesn't mean that I am not going to get into the stock again. I might get into the stock again because the basic parameters don't change. The base stage still remains 3. It is not yet gone into base stage number 4 or 5. So there is opportunity again. I am just controlling my risk given the current market conditions. Okay. So 13.01% gain in roughly maybe 2 to 3 weeks. That's a good trade. Okay. And I keep an eye on the stock. I hope that the red flag that Market Smith has put on this stock, I hope that red flag goes away when the new buying opportunity develops. Okay. Let's see what happens next. I am not guessing. I am not predicting where the market will go. I don't know. That is not my job to know what is going to happen to the market. Based on what I see now, I feel that there is merit in just getting out, book the gain, sit on cash, relax. Okay. Thank you so much.